Good morning, good afternoon, and good evening, wherever you are joining me, and welcome to the 21st edition of Investdata Academy Live with Ambrose. This is another afternoon that we're going to look at the market because the way it's going now, you can see that the conflict between Russia and Ukraine is becoming tense. It's being fueled up every day, and that means that you as an investor and I as a trader need to really adopt a strategy that will help us to survive this period. And actually, before you do anything, I always say people that or investors anytime, any day, your stop loss should be at your fingertip at any time. Your entry and the exit strategy will be there, and your profit target. These are the things that you should always equip yourself with. Any market you are playing, whether you are doing currency, you are doing a future, regular stock, you are doing a commodity. As you speak now, and the commodity price are really hitting up almost 14 years high. For that, there is that another strategy to be adapted. The trade we are trading before now should not be what to continue because tell you the trading environment is changing, and because it's changing, you also want to change your strategy. Yes, today, as I said, investors globally are seriously concerned over what is going on or what is happening in East Europe as the conflict is being fueled up on daily basis. So that is this is the time for investors or traders now to adjust to this higher volatility we are seeing or rapid changing market dynamics or situation as it is. So that you can stay ahead of the market. If this is not time for you to stay back and say you are looking, no. The events unfolding, you change your strategy, which sector, which area, which investment asset class are you to put your money now, and where is money flowing to. These are the things that will be guiding your movement of fund on where you should put your investment, because that is the only thing I know that one should do, because staying back will not solve the problem. But being active and know that you are using your, I always tell that your price action or your index action, your stop loss, all these things, either your resistance and support level tools, all these technical tools will go a long way to help you to know what you are doing. One of the best way to do this or to monitor the market or to stay ahead of the market is one to monitor the different asset class, what are they doing and where are they going, and also track which investment are going on now, which investment window is fund flowing to, are gaining either are gaining inflow of fund, are losing inflow of fund. You need to know, because this will determine your consistent growth or profit in what you are doing in your portfolio. Because if you don't know where fund is flowing to, and you are an asset or an instrument where funds are already living and you are still there, that means you are bound to work to sync with that asset class or that position. You need to know when fund is leaving so that you too will move ahead of the fund, so that you won't be tied down. And that's why at this time you need to track where is fund entering and where is fund. That is why if you look at the analysis on a daily basis, you look at where is money flow. That money flow is very important. It tells you, give you an idea where fund is ending, because you are seeing the volume relating with the price movement, and also tell you where funds are entering and what funds are losing, are exiting, so that you know exactly what to do at that particular time. Because that is the way to stay ahead of the market. As we speak right now, market players globally are kind of panicking. Why is it they're panicking? Because oil price and other commodities are hitting their roof. For the last days that this incident commenced in East Europe, you can see that oil price and other commodity has hit almost 45% and above. It's a serious concern for most of the players in the market now, because these are asset class that either you are going to they are all on the rise. But I tell you, to navigate this current market volatility or uncertainties, you need to use some tools, and which tools I'm going to mention now before I go to tell you the state of the market, and look at some financial that were released over the weekend, and how we can also use them to either to hold a position or to sell. But to navigate this current market volatility, you need to learn how I use specific technical tools to help you understand price cycle, candlestick pattern, trend lines, support and resistance level, to identify strategic entry and exit point for a sector, the market, or individual stocks or trades. Because if you know how to use all these technical tools or indicators to know exactly what to do, it will go a long way to help you, so that you will stay ahead of the market, not that the market will come and put you where you belong. No, you used to stay ahead of the market by using all these tools to know where the market is heading to. But that is how to do, because over the next, because I'm seeing that over the next 6 months to to 12 months, over 2 years, ahead, I expect that there will be very large kind of called price swing in our market and other assets class, because things are changing globally. As things are changing globally, there are bound to be what a change in in price swing in most of the assets class, and that was to ask guide you where you should go. Just as just as we're just seeing a revaluation phase coming up. If you look at the valuation on the banking sector, is already changing. The ones in the oil sector, this revaluation changing phase we are going to enter. It's going to also determine which sector should go. That's why you as an investor, like I always say, you have to find those stronger group stocks and the sector to position. Once you position in them, that will give you a strong kind of defensive coverage. And that's why this time, like the common master class we are doing on the April 2nd, I'm telling you that master class is what every serious investor should not miss. Because really between now and the mid-year and also the end of the year, volatility in our market will be on increase. And for you to stay on the safer side, or to you also to stay in the same market that is volatile and be making money, you need to know those kind of strong group stocks and also sectors that you can go and play defensive at the same time to be earning money. Because we want to discuss this with technical tools and also strategies that have been tested by most of the professionals that are going to teach on that day. And also, I myself going to discuss how to use earnings. I have seen earnings also this post pandemic shift, how it's going to affect our position going to the future, especially when we see that there's uncertainty in the economy and also political fear, because being a pre-election year. All these I want to discuss in that matter class. I look forward to see every one of you. If I want to join us, whether you are in Russia, whether you are in Germany, whether you are in China, whether you are even in Ukraine, anywhere you are in the world, US, London, South Africa, you are free to join us, because as we speak next afternoon, you can see that many of them also already, Nigerians over there are already joining us this afternoon to see what we are discussing, because this is our market. We know yes, there is how what is happening globally influence this local market, but here we are seeing that there are some also factors in favor of our market. How can we play the volatility we are seeing being pre-election year? We can also gradually see that by middle of the year, you can see that electionary activities will also be on a high gear. That will also bring out where fund is going to flow to. Funds will be coming and funds will be leaving. We need to know where that is how to invest. That is why we need to be in the master class so that we'll see ahead in the next 90 days where should be, and also how to invest for the rest of the year. That is why you need to join us. Yes, before I go into the charter section of our discussion, we want to know the state of the market before we look at the few what we call a financial statement that was released to the market, or call them financial news, any news that were released to the market, how it's also going to affect some of the position that we are. But as we speak now, I tell you this midday already. We are also expecting the afternoon to that come. But as we speak now, market is already in red. Market have dropped to 47,187.42. Market are pulled back today again. Don't forget that for the last 4 trading days, we have seen the market in red because of what panic, what selling and fear. But at the same time, it's also creating an opportunity for the investor to look at the sectors and industry where they can position, also using their technical tools. This is how to invest. But as we speak now, I said the market is on a pullback, still market in the red of about losing about 0.20 as we speak now. And they tell you the top trade in terms of volume as we speak. Unity Bank, UBA, Zenith Bank, Port Gold and Fidelity. These are the top trade in terms of volume. Then if you look at the market breadth, I'll say it's still marginally positive, because we're seeing 8 gainers against 11 losers at this hour. Don't forget that we have 90 about 2:30 for the market to close. But as we speak now, we're having 8 gainers and 11 and 7 losers. And among the top 8 gainers, the top ones are number one there is UPDC, followed by Linkage Assurance, next Niger Insurance, COVID Business Solution, and ICO. You can see that most of the top gainers this morning are what insurance company. These are companies that I know they write undertaker the kind of underwriting, risk on all those stuff. I see that they won't top in the gainer this morning. Then the losers, as we speak earlier, I said there are 7 at this hour, but the top losers are ROTB School, Honeywell, and the Wapik and the Wapik Insurance, now called Corporation Insurance. Then we also have Livestock and Nestle. You can see why you see that the market has dropped like 0. It's just because one of the big ICAP is also losing. See Nestle also dropping, so you will see the market in red this hour. I believe that before the market might also to gain back what he has lost, and I want to brought the market to this position. I believe that the way we saw market performance the last 3 days, 4 days before today, I see that as at yesterday, we have seen that market are trying to find an equilibrium where it can decide whether to go up or down, because market just lost marginal 0.01 as at yesterday, and we have a positive market breadth and a low no traded volume. Tell you that market resistance was decline, but this morning, because we are seeing a high cap stock like Nestle losing, you can see that it has dropped the market a bit down again. But I believe that before the market closes, no, it might go up, because actually, as I speak now, market is missed. You can see that market is because positive. You can see that there's a marginal positive breadth already, and we'll see high volume this morning. The volume coming from Unity Bank, about 500 million shares is being traded already in that Unity Bank. This also should guide us what to do at this point. For me, we are good to go here to see those financial news, or what we call them financial news, or we call them earnings news. But before I go into the technicals, I want to look at them. Yes, one of them is GT code, which I just mentioned briefly yesterday. But today I want to look at the figures that emanated from this group, because now it's a holding company. That's why I call GT code. The GT code top line, which is the gross earnings, I will tell you, they recorded a decline. It's not decline, just marginal, but for the bottom line, which is the PAT, we also saw a huge decline. But 13 is not, it's just a number, it's just a big number for me. If you look at the top line, which is the gross earnings, it dropped from 455.23 billion to 447.81 billion, a negative drop of what? Minus 1.63. That means it declined by 1.6. That means you can see that there's a decline compared to the previous year. Then look at the profit after tax, the profitability level. Put every investor, you and I, the trader, are interested. Yes, we have seen that they are within the top line and the bottom line activities of paying tax and all, which is good. But we are interested in what? In the profit after tax, because that will determine what will come to you and I as dividend or anything, because they won't pay you anything, they won't declare anything until they have taken care of the expenses and they pay government the tax. There is now we have profit after tax. That is where you and I are looking at, because it's from here they will decide what to go to you and I. Then that leads us to an earning per share of 7.11. No, they declined to 6.114. Sorry, I said that the PAT dropped from 201.44 billion to 174.84 billion, losing no 13.20 for the year under review 2021. Then also in the same direction, EPS dropped from 7 naira 11 kobo to 16 naira 14 kobo. Yes, this is a bank that we know that are more efficient. Also, you can show the number that the profit margin has also dropped from 44.25 to 39.14%. I can see that you can see the difference there. The year that we are 2020, you can see that their profit margin was high, about 44. But this year under review 2021, it has dropped from 44 to 39. But that means in every 1 naira earnings earned on their gross earning, about 39 kobo is retained as what? As dividend, as a profit, sorry, as profit. Then out of their earning per share of 6 naira 14 kobo, that they have a declared final dividend of 2 naira 70 kobo, in addition to the 30 kobo they pay earlier. That is the same 3 naira, which also they did in the previous year 2020. For me, this is the position of GT code, and you can see the market is not really smiling with this kind of result, but I see that going to the future, might see stability in this bank and also pick up. But the good thing that I look at UPA result, after UPA result, I said it yesterday that it's a good result. That's why that yes, the top line and the bottom line, they were in positive. Yes, around the 7.8, we have to be like around 20 will also be smiling, but still they are able to sustain their positive performance from the quarterly result we have seen to the final result for the year. For me, it's a good one. UBA top line, which is their gross earnings, move from 616.84 to 660.23 billion. I'm recording a 7.0 growth and uptrend. Then also the PAT also in that direction, the same direction as I said earlier at the top one, 109.16 to 118.68 billion, also representing a 8.72% growth. EPS maintained that same direction from 3 naira 10 kobo to 3 naira 39 kobo for the full year, but their profit margin also inch up from 17.70 to 17.98. It's an improvement, but marginal. Then the good thing is that if you look at the final payout in terms of dividend, The previous year, I think the year they paid for the final was around 35 or 37. Therefore, this time they are paying 80 kobo, which is huge. You can see that is more than over 100% good content of their final dividend. Altogether, the previous year they paid about 57 kobo for 2020. For 2021, altogether we are seeing a 1 naira dividend from UBA. This is a good one, and it's a good sign that where UBA is going. For me, investors in UBA should also know that this company, this bank have been consistent. Now that they've come back to their 1 naira payment, I see that it's kind of a pointer to where we are going in the next financial year. We believe that the way the economy globally is going, because I see that the way COVID-19 also slowed down the economy. The ongoing concern about Ukraine and Russia are likely also to slow down another economy in 2022. And for that, as an investor, you need to move where you see that whatever is happening now is impacting some sector, while some sector are also suffering. You need to readjust your portfolio. That is the way to go. That is why portfolio reshuffling at the same time, sectoral rotation will continue because you need to go where exactly you see value, and that is how to invest in this season. You don't stay put because you love the name of the company, or you need to see how going to this company to be affected. Because as you speak now, I'll tell you, as there's fear all over the place, I'll tell you those travel related companies like airline, hotels and others will be affected because you won't see tourists coming here and there. I say hello, coming to do tourism here because everyone is afraid. So we don't know what will happen. For that, they are staying put, just like what we saw in COVID-19. Like this was another dimension, but the same risk also are there with the global economy. This is likely to slow down the global economic recovery and also some region or some countries what economic activities depending for those that depend purely on imported activities or imported goods. Everything they do is imported. They're going to kind of experience some slowdown. Even some companies that are also dependent on some imported raw materials. If they are affected by all these hike we are seeing in price of all those commodity, automatically if they are unable to pass this high importation into their consumers, it's going to affect their demand. End of the day, it's going to eat into their profit line or their bottom line at the end of the day. For you as an investor, you need to be analyzing good sector. That is why you must not miss the master class. There, I'm going to explain that some companies are going to benefit from it. Why they're going to benefit from it? Why you should play defensive? Which stock, which industry that you should put your money, even when we're experiencing all this, I think we'll see some sectors doing well, while some will be lagging. For that, don't prepare yourself to be in that meeting because that is the way to go. You need to look for information. I get information to also put your portfolio on the right perspective that at the end of the day, your portfolio provide consistent growth and income for you. But that is why we invest, because every investment is for, again, the future investor purpose of making what money. Only that at times you might not get it right. That's why I say let your winning side be more than what your losing side. With the help of your tools and your technical knowledge, you can stay ahead of the market so that at any given time you can still stay in profit. I won't tell you that nobody will guarantee that you don't lose in trading in any commodity or any instrument, but let your winning side be more than what your losing side. Yes, quick one. We want to look at the market as market is ongoing now, especially the it's on now. Especially, we want to look at the index. I will tell you that if you want to enter the market, the first you look at what is the market doing, what is the general direction of the market. Because I said earlier that 50% of market direction also impact on other things. That means price of equity on any floor has 50% influence on the general market direction. If the market is bullish, going to have something on what on the companies listed in that. If it is bearish, also this, and that's why anytime you want to jump into the market, you need to look at what is happening in the general market. That's why we don't play with our all share index or call it a NGS NGS index action, and which you can see on here is already on. But you can see from this point to here, we are looking down. As I speak now, index is still strong. I said earlier, until you see this is a big candlestick here, that took the market to all these points. I can see since then it has not broken above that, only marginally touch it when it broke to touch it to test several 47,613. Before start coming back, I can see that the market until it crossed down the 47,000 mark, which is the here before we now start saying we cannot say confirm that the market is on a downtrend. But to speak now, I can see the market is experiencing some distribution phase, not really in a decline, but let's see how it look like. But if you look at, if I draw, a trend line here, you can see that yes, the market has broken some trend lines down. That means that's why I said it's on a distribution, yet to enter on a decline. But once market break down the 47,000, I'll tell you that will not say market is seriously on a decline. But to speak now, the market is still healthy and strong. I told you earlier that because of the earnings season, knowing that this is the peak of earnings season in our market in Nigeria here, I will expect more companies to release their numbers, and these numbers are coming with a form of reward or compensation for having confidence in these companies on their management. That will also keep the market this direction until all these numbers hit the market. Another thing that after this earnings season, you might see correction depending on what on the event happening, in Ukraine and Russia. If before no end of the month we've seen the kind of a settlement, but you know that it's going to take those two countries long time to settle because of what they are destroying now. But that means other markets of the world, that most of these things that come from this environment will also influence their prices. That means inflation. No, that means no, inflation will remain in the uptrend. But all this happening is going to put pressure on inflation. That means CPNs of most of the world, CBN has to, the central banks have to do serious work because there will be policy change. And when there's policy change, you know how it affects investment. That policy change should expect that most of the central banks of the world will have to do adjustment in their rate and all those stuff. That has the world also influencing flow of fund in the market. That is why, as a trader or investor, you want to look at where is fund flowing for. You need to track it. Once you're able to do that, that means yes, you are following the market. Let's quickly call our what we use our indicators to know exactly what is happening at this hour. But I've told you earlier that the market has kind of pulled back a little again this morning because of high cap. Nestle is losing, and that is what we're going to see and confirm the state of the market now. Let's quickly do that. But let me call the Bollinger Band and other indicators to today's chart so that we can see exactly what is happening here. Yes. Can see from here we can see I can even start smelling some things already. So putting the indicators to look at. That will go a long way to help us. That's why I said it's the time for you to know the kind of tools you use. Those tools I mentioned when I was doing that, you need this time for you to look at tools that will help you to stay ahead of this market at any time so that you can take the right decision at the right time. As we speak now, yes, you can see here, look at this blue line, this one here. You can see it's also flat. The on a day chart. Let me take 1 hour chart first before we look at the day chart now. On a 1 hour chart, I will tell you that the market is below the 20 days moving average and also below the T line as to speak now. But this on a what on hourly chart, and you can see, and on hourly chart you can see also fund is entering the market on hourly chart. You can look at the indicator here, the money flow index looking up, and your MACD is also trying to cross from the bottom. You can see on hourly chart. You can see, look at that. Is why I say it's going to look at an hourly chart what is happening in the market in the last 1 hour to tell us exactly. You can see that, you can see this bearish candle here. Market has broken down the 20 days moving average and also the 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 T line. But in technical analysis, when you see your price or index resting on the lower Bollinger Band, it's a sign of buy. But you can see that as we speak now, market have pulled back on the hourly chart to touch even the lower Bollinger Band. But for me, it's not enough confirmation for us to jump into the market because we know the state of the market now globally, and also the panic selling in any different part of the market. That's why there are also some market of the world to speak now are in green. I'll tell you, most stock in Europe market are also closing higher at this hour, are trading higher at this hour. For me, it depends. That's why we need to look at very well what is happening in our own market. You can see here that on the average chart, our money flow is still looking up, but marginally. That's why I need to go back to the day chart. Let's see what market have done so far. Because it's still ongoing. You can see that here the momentum or the activities here is becoming slow and tiny. That's why we're seeing a little high volume this morning. But the good thing that you see, can see that the volume this morning is above the average traded volume, and that is why it's moving above the black line here. This is your volume indicator. You can see that here, and also it's a red one. Tell you that the market is already in red. And don't just only that. Look down here. You can see that your money flow is already looking down around the 53 now. I said whatever I cross 50 down, it's a sign that funds is really flowing away from the market. But if it reverses from this point, there's no cause for alarm. But as we speak now, because of the big cap, especially Nestle is on the red side. You can see that it also reflects on the market. Also, if you come back to this your histogram here, and don't forget that MACD remained bearish. And look at here, it was coming up for when we are thinking that it will cross over. But since then, as the market continues to side trend on a negative movement for almost 4 days now, today making it 5 days, if the market maintain this posture, this hour to market close, that is 5 days. That's why it's also reflecting on the histogram here. After you have tried to close up, now it's expanding again down. That means market is becoming more bearish, with the trend we're seeing so far in the market. But that should not send panic. The stop you are that your stop loss and other technical indicators are guiding that they are still strong. You can still also hold them. Yes, quick one before we say because of our time. Let's quickly look at what is happening in next that have put the market down at this hour. Don't forget that today also is the last qualification day for UCAP, and UCAP has to have refused to break down that 13.90 kobo as we speak. For me, it's a good one for UCAP. But if before market close, let's see that it will go back to the 14 naira, that will be a plus for UCAP. But after the price adjustment, I believe that there might be another move. Or because of the fear we're having globally, they might stay at that level of markdown for a while before they pan. But I'm telling you, if you're a long-term investor in the stock, you don't need to panic even when they mark down your position. Because I see that when their Q1 result comes to the market, it depends if they maintain the tempo or the rate of performance we saw in the previous year and from their first quarter. I tell you, the first quarter was seeing will give us some downside where it's going. If that trend is sustained, I see this stock even touching 18 to 20 naira before the financial this year. And if they maintain it and start seeing their second quarter moving in the same direction of what we saw in 2021, that would be good for UCAP. Let's quickly look at the chart of Nestle before we call a day for today. I believe that we got one thing to take away from this class. I always say that in every discussion, there's one thing that will take away from the class that will affect your portfolio, your position, your trading, your investing positively, and that is why this class is holding every 12 to 12:30. It's purely education to guide. We don't recommend stock here, but just to guide you and tell you what is happening and how you can make informed investment decision, not panicking out, and especially now that the market is volatile, I should know when to know you should know when to stay in a position and when to exit. Once you know that, that is the aim and the purpose of this class. Let's quickly want to look at what is happening in Nestle. You can see Nestle chart here. I'll tell you this is more of a flat chart that the stock for me, it's not volatile for people to trade or trendy for people to trade. But it's one of the stock you can use also to manage your portfolio in terms of defensive. Fine. You can see that this stock will trend from here before you make a move. You can look at it. For me, this stock is not too active, and because of the volume and the price, and also don't forget that the shareholding structure is tight. Don't forget also in 2021, from January to the end of the year, we saw the activities of the foreign investor that has the shareholder as they're accumulating more. That means this stock is not in many hands here in Nigeria, in few hands, and they are not selling. I can see that is why the price remains stable. But today, you can see this red pullback here. All these ones we are seeing here up and here, this is the price it touches, but because there's no volume for that day, it comes and close the same price. And that's why you are seeing on it can go up. There's no volume to sustain that, to bring that change, to come down here. To go down, to stay below the normal price. If there's no volume to complete that 100,000, in an exchange, we have a rule that for a price to change, you must trade about 100,000 units. And even though we are seeing the red here now, depending on the volume, let me see, on the volume of the stock. If the volume is not up to that 100, you can see that the volume is in my life if they are above 100. If the volume is not up to that 100, above 100, that is why. If the volumes are not it's above 100, that's why it's still down. If any information comes like changes up, that also the board can see that this stock was cited for how many months here? For almost like a whole month, still trending, and it tried to go up, but because there was no volume to make it 100, it dropped. That's why for me, you have to also use this stock just only for defensive. For more of activities up and down, we don't see it in this stock because in the main, the share issue is very small, and also the high because of the price also is high. Most people don't play with this stock, but if you are a design investor, when you see this stock dropping to as low as 900, 1000, and but at this price now of almost 1400, I see that the price have remained on a side trend for a long time before pulling back now. It's another information that will take it up. Or if the markdown, fine, the price can still go lower. But let's see, it's a stock that you can use to play your defense when you want to play defense in this market. But that is the only thing I know that that is the opportunity you have to do, because in terms of dividend yield, no matter what they are paying, dividend yield still remains small. But in terms of defensive, or want to make your have a balanced portfolio, this kind of stocks and others should be in your portfolio just to balance your portfolio, to play defensive in terms of market go against you. Because this kind of stuff, before they lose 10%, is very, very difficult. And when they lose 10%, that is a very huge loss. But if it's not possible, that most times they don't lose it easily. That is why most people, traders, advance, want to put them their portfolio to balance their portfolio at any given time. Yes, on this note, we'll call it a day here. Our time is, it's almost spent. For me, I see you tomorrow again at this hour, then with another idea that will also guide you. For what I've shared now, take time and look at it, meditate on it, and also you to put into action. But one thing that after learning on what this, try and practice what we have shared here to see how it will affect your portfolio positively on the other side. But I believe all we share here is to affect your portfolio positively, and when you do it regularly, you also become an expert. Your portfolio also advance to give you more return. See you tomorrow. Enjoy the rest of your trading day. God bless you.